talking to Craig Ransley today, who is the Executive Chairman of TerraCom Limited, ASX code TER. Now, Craig, you've gone through a long, drawn-out process in regards to the refinancing of your debt. Can you tell us as to why it took so long?
Mate, in a simple answer, I think, thermal coal. There was a number of external factors, that hampered the pathway. Finance is providing funding in our market is, extrememly minimal at the moment. Liquidity in debt capital markets and COVID, mate. I mean, it's no easy task, and there's only a limited number of parties now around the world willing to lend money to coal producers, let alone coal producers that generate 100% of their income from coal. And as you know, there's a lot bigger companies in our space that are facing the same issue at the moment. Many of the lenders are driven by the ill-informed climate change protesters who, want everything to stop today, instead of, creating a proper plan that'll transition the industry and the carbon economy, over a period of time that is sustainable for everybody. But the lucky thing for us, the coal that we sell is, good quality coal, low sulfur, low impurity, and we sell it to a number of players that are not just in the thermal energy space. People like sponge iron producers out of India that create steel. But look, mate, I think everyone's looking for leadership. Our industry is looking for leadership. I dare say we're definitely not getting it from our political leaders at the moment. Everybody is knee-jerking and wanting to appease the vocal minorities. And, the vocal minorities, to some extent, over a period of time have got a point. But, what we in industry want to see is a transitioning period that gets us from where we are today through to what the new future is going to look like. And if anyone turns around and says, well, wind farms are going to create as many jobs as the coal industry in Australia, I mean, that's just a pipe dream. It needs to be done with some science, with cool heads, and it needs to be done properly and systematically. And as yet, I've seen no transition process put in place by any global political leaders. And in fact, with the cold winter coming on now in Europe and China, we've seen the exact opposite. We've seen, coal fire prices ramping, demand increasing, and countries even turning coal-fired back on to make sure they keep people warm and get them through the coming winter. And that's, I suppose, that's endemic of politicians having no plan. So we can only go by what we're seeing in the industry at the moment. It's a scattergun approach, and we as, I suppose, leaders of our businesses and our companies would like to see a proper transition plan over a period of time.
Craig, can you clarify the terms and the details and the parties involved in terms of your debt restructure? Do you have clauses in there that allows you to amend the terms or terminate it early if a better offer presents itself?
I think it's pretty simple, mate. We're rolling with our current bondholders up to December 2022 at the same interest rate that we've got now, with the same special interest that we've got now, 0.75% of BA revenue, and monthly repayments, principal and interest will be made based on free cash flow in the company. As we sit here today, the total redemption amounts to 167 million. There's no restrictions on prepaying or repaying the facility, either through additional free cash flow or if a better offer presents itself. We continue to enjoy strong support. I mean, there's been a lot of, what would you call it, mate? A lot of armchair experts out there on social media, hidden behind names that we'll never know. But the key point is this, from a shareholder perspective, is that the board and the executive management team, we had many offers to refinance this company at an early stage, and all of those offers included a massive wipeout or a considerable wipeout of shareholder equity. Okay, so the path that we've steered through this And albeit, that path has been helped by, rather buoyant coal prices. But before that, Danny and the team had done an exceptional job, managing the costs and managing the profits. But at the end of the day, if we didn't have the support and the fantastic support that we've got from our current bondholders, the only offers to refinance TerraCom coming from Australia would have included shareholders and day traders getting a massive equity wipeout, as you've seen in a number of our peers. So to come out and go through what we've gone through, to come out the other side with the profits that we're producing, and the next 6 months, what it looks like and what we'll get the debt level down to, I think is a pretty exceptional experience, effort, on behalf of the team and the board. And, one day that'll get appreciated, but we'll keep our powder dry and just continue to deliver on the results and run the debt down, and run the company as we should.
And Craig, South Africa has been an issue since you've closed the Universal deal some time back. And South Africa's kind of struggled for many reasons, one being COVID. You've had some bad weather and you've had some issues with Eskom, which is your major government contract. Can you give us a little bit more colour on what's going on in South Africa at the moment?
I tend not to sell rear vision mirrors, but I try and sell coal instead. But the efforts of the team, South Africa got us through a period after the transaction. If we didn't have South Africa, we wouldn't be having this conversation now, right? From a cash flow and a profitability perspective. When the coal price was on its knees, and BA was in the middle of transitioning from being, a contracted mine to an owner operator, so that it actually make profit, South Africa got the company through, right? So I'm not going to be too harsh on South Africa. I mean, South Africa is a hard environment. We've dealt with issues from COVID to Eskom, to, the biggest one from an export perspective now is Transnet. It's bottlenecked. There's no money to spend. There's plans afoot, which are in confidence, and I can't talk about those. But there are plans afoot to try and rectify Transnet in South Africa. Once that issue and that bottleneck is finalised, things will be good. I mean, we're back to pre-COVID tonnages. We're making money. An increased margin now, 28%, I think it is, over and above what we were at this time in financial year 2020, right? So it is coming back to what it would be, mate, but it's not going to get back from an export perspective until the Transnet issues are finalised, right, and fixed. But as I said, we sold, 1.9 million tonne in September 2021. It's 2022, we're looking at annualised 7.6 million tonnes, right? So assuming we got the September margin of, I think it was 11.4 from memory, then the gross EBITDA for, South Africa will be 85 million, right? So, that's not a bad result. Half of that's ours, be 42.5 million, obviously. So the export market, mate, how long's a piece of string? I can't answer that one. We've got a couple of export loads out, profitably out, that we're doing at the moment. And again, I'll be scant on those details because we'll announce them to the market soon. But, that's incredible. With the prices, I mean, we are actually trucking the coal close to 500 kilometres. And we're still going to make very, very good money out of that contract, right? So they're the sort of things we're doing until Transnet, gets up and going. We got many buyers, obviously, made lined up for, RB1 and RB3, now 6,000 kcal and 5,500 kcal coal, respectively. But, we just need to get the logistics bottleneck sorted out, and that's a country issue. That's not a TerraCom issue. So we're relying on an industry-wide approach for that, in partnership with the government and with the country. So I think it'll get fixed, mate. South Africa is a very misunderstood country. I mean, we're making money. We've got great partners in South Africa. Danny spent 6 months over there, right-sizing the operation, working with our Black Empowerment partners, and you know, it's making money. It's contributing, and that's really all you can ask of a business unit, you know. And over time, as you know, some sort of program gets put in place globally to, you know, one day reduce the need for thermal coal. You know, we're also working very, very hard on the African continent on bauxite and iron ore, which we've already announced. And you know, from a numbers point of view, once that gets up and going in the next, you know, 24 to 36 months, you know, coal will end up being 30 to 40% of our revenue stream, and decline over time as those two projects continue to ramp up and increase.
Now, Craig, Blair Athol has been, you know, it's become the jewel in the crown for TerraCom, and your latest coal sales are really impressive. Can you talk to Blair Athol?
Yeah, this is one of the ones that everybody told me that I was mad when we initially did the deal, but it's jewel in the crown is probably the right word, mate. You picked that very well. You know, back in 2019, when we had a glitch in the coal price, we had an EBITDA of 103 million for the 6 months on coal sales of 2.3 million tonne. I think from memory, mate, the operating EBITDA was the margin was around $45 a tonne at that time. Then the price dropped, and we had to go back to the drawing board and go from from a contracted operation to an owner operator, you know, to make the mine profitable again. And we realised cost savings of, you know, around $15 a tonne, which was about, you know, $30 million a year, based on, you know, the 2.2 million tonne that I said before. You know, once the debt, you know, has been fully repaid, you know, this will translate, BAS alone will translate to almost, you know, a 4-cent annual dividend to shareholders based on current shares on issue. For the September quarter, which we've announced, you know, we're on track for 2.3 million tonnes, an operating cash margin of around $65 per tonne, generating 36 million Aussie EBITDA. And, you know, we forecast for December 2021 to 575,000 tonnes at a cash margin of more than $130 per tonne, which is expected to generate an operating EBITDA of some 70 million. That's been revised down slightly because of the, you know, the slight drop in coal prices over the last few days. You know, so we forecast to deliver 6 months to December 2021 around 111 million Aussie. This will obviously surpass 2019's record because it's only from 6 months of operation. And, you know, importantly, you know, BA has very limited capital expenditure. We spend our money as we mine, so it's part of our operating cost. So you know, the future for BA, mate, looks pretty rosy. Another circa 9 years mine life. Yeah, it's good.
And now, Craig, this debt that you've obviously refinanced, you've got strong cash flows coming through from Blair Athol in particular. Do you have concrete plans to pay off this debt?
As I touched on earlier, you know, I'll just throw some hypotheticals around, right? We've made the decision, obviously, by signing this deal, mate, that we're going to decrease. I mean, the biggest thorn in our side over a long period of time has been the debt level of the company, right? We've serviced the debt, but, you know, we've still got the debt, okay, as we've expanded and we did South Africa, etc. So, you know, the redemption value, 30 June was 167 million, right? We've done the deal with the current bondholders to refinance the debt, which sees principal and interest repaid over the next period of time. via monthly cash sweeps based on profitability, leaving obviously a big enough buffer in the company cash-wise to enable it to operate and continue to do what it does. We're forecast to achieve 75 million EBITDA, which I've said earlier, which is an FX of 75 is 56 million for December, right? US. So conservatively, look, we're getting very, very close to securing all of our March quarter. So I'm very comfortable imminently we'll have the March quarter completely sold. And then we've just got the last quarter to nail down. But if we generate similar numbers to what we've already achieved, hypothetically, let's be conservative and say we generate 27 million US a quarter, right? And South Africa produces what it did in the September quarter. It'll pretty much, we'll be able to reduce debt by 110 million by 30 June. Moving forward, we probably will announce that, mate, on a monthly basis when we put out our coal sales. What we haven't announced to the market is we bought all of our interest as of last week. A part of the deal with the finance is that we, pretty much unpicked the last 6 months of interest up to 30 June. So we've now paid that. And we've now pretty much paid interest nearly up to date now, our cash flow. So, I think that reducing our debt burden over the next 6 months so that we can then start focusing on doing what we need to do and distributing cash back to shareholders is our number one priority.
Craig, you touched on diversifying your revenue away from coal or decreasing it away from coal. Can you talk to what potentially that diversified assets look like and how that can play out?
Yeah, sure, mate. I mean, I think we've pretty much killed the bauxite. We've announced everything we're doing with the bauxite in the market in Guinea. And moving forward, obviously the plan is to do up to 8 to 10 million tonne of bauxite over a period of time. But without going into too many details, because they are commercially in confidence at this stage with the parties we're dealing with. But, mate, suffice to say, there's been a lot of money already spent on the iron ore opportunity. And, you could be pretty confident if and when it's finally done and secured that it'll be a deal similar to what we did in Queensland with Blair Athol. Low entry costs, low capital cost, production pretty quickly because of work that's already been done and money that's already been spent, and ramping up over time. But we don't foresee any debt load on the parent company balance sheet for that project. We're already talking to, and we'll have partners at a project level. That the debt will sit in a project vehicle, not sit on the head company stock. So that is pretty much how we will move forward in this period. If we want to do an expansion or want to do another project, we'll find relative peers and relative partners in the appropriate space, and we'll fund the expansion at an SPV level, not in a parent company level, with the inclusion of partners on the go forward. So it's pretty exciting. A lot of people in Australia don't understand or don't like Africa. They understand Blair Athol, and anything outside Australia they don't really care too much for. But at the end of the day, TerraCom as a company has got to have a future outside of Blair Athol, and until the board are told otherwise by shareholders, that's what it'll continue to expand and look for more exciting projects that deliver, similar to better profits than Blair Athol being the jewel in the crown.
Craig Ransley, thanks for your time.